Today is Monday, October 2nd, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Alan Bush, ADMIS Senior Financial Economist. Starting with the financials this morning, Alan, when it comes to economic reports, what should traders be looking for this week?
Okay, well, first of all, tomorrow we'll have the August JOLTS report. That's the Job Openings and Labor Turnover Survey, and that's guessed at 8.9 million. Wednesday, a heavy slate of reports. The September Purchasing Manager Services Index guessed at 50.2. August factory orders anticipated to be up 0.2%, and the September Institute for Supply Management Services Index at 53.7. Then on Thursday, not much other than jobless claims, and that's expected to be 210,000. But then quite a few reports and very important reports on Friday. The September non-farm payrolls guessed at up 160,000. Unemployment guessed at 3.7%. Hourly average earnings anticipated to be up 0.3%. And then later that afternoon, the August Consumer Credit Report anticipated to be up 11.7 billion.
Alan, there's been some recent strength in the U.S. dollar index. What are the fundamentals and technicals saying there?
So right now, the fundamentals still seem to be bullish on balance. We have interest rate differential expectations that have favored the dollar for quite some time. Also today, higher Treasury yields taking the dollar higher. However, the technicals seem to be turning a bit more negative over the last 4 trading days. On Thursday, futures rolled under a trend line that is following through in the last day or so. But other than today, though, the technicals seem to be a little bit more negative. A couple of trend lines really not holding. So even though the dollar is a little stronger, the technicals are a bit on the weaker side. So I think that's a sign that this market may be a little bit toppy, and I would be lightening up on any longs in the dollar index.
Now, we haven't looked at the crude oil market lately. Alan, can you share for our viewers the current technicals regarding that marketplace?
So first of all, the fundamentals seem to be still very supportive. You know, there has been some supply cuts, but the technicals starting to turn a bit weaker. In fact, we had the crude oil market trading above a steep uptrend line on Thursday, but no follow through. And now today we are penetrating another uptrend line on the downside. So 2 signs of weakness technically. So I think that there may be some follow through weakness in the crude oil market with what we're seeing over the last 4 days on the charts.
Thank you, Alan. Turning toward the grain markets, Mark. Were there any surprises in Friday's USDA report?
Yeah, to me, the biggest surprise was a 55 million bushel increase to this year's spring wheat production. This amounted to a 12% increase from what was projected in August, and I suspect this was the largest August to Sep increase ever, and this versus expectations for a modest decline. The average yield came out at 48.5 bushels an acre, and that was just below the record yield of 48.6 just 3 years ago. This while much of the crop endured drought conditions during the summer months. Winter wheat production was also raised a bit more than expected on Friday. It was up 21 million bushels versus expectations for a modest drop. We were in the minority here. We were expecting a little bit of an increase of about 10 million bushels, but the USDA came in even above our projections. But despite all this, September stocks came in at 1.780 billion bushels, barely above expectations. So given all this, we kind of felt the market was overdoing things a little bit to the downside on Friday, with most contracts making new contract lows or multi-year lows, as speculative traders just continue to pound the downside for wheat.
And Mark, how about an update on where that spec money is positioned currently? Any changes from last week?
Yeah, both in Friday's CFTC report, both the index funds and money managers were net sellers in the ag space, and now this for the fourth consecutive week. The index funds position is back now down to levels just off the lows here from this past spring. We saw a bit of an increase over the summer months, however, as I think the threat of perhaps another rate hike or just the interest rates being higher for longer, I think has just continued to trigger some liquidation in this space. Money managers are still continuing to hold a very small net long position in agriculture. It's now down to the lowest level in 3 months. They remained long across the board in the soybean complex, but at the lowest levels in months. The short position in corn now, that has swelled to, we got it over 170,000 contracts, and that's the largest short position in just over 3 years. And in wheat in Chicago, the short position there, probably back over 100,000 contracts with Friday's close. And they're also net short a little bit of Kansas City and Minneapolis wheat as well.
When it comes to this week, Mark, what are traders looking for, looking at the price action for corn and soybeans?
Well, with the government shutdown averted, at least for now, we're going to continue to get our weekly updates, crop condition, crop progress, and just the weekly usage data. So we do have the crop progress report tonight. We look for harvest coming in just over 25% in corn, just under 25% in the soybeans. And with this last wave of prices down, we have become much more competitive in the global marketplace. So I'm eager to see this week if we do get any large export announcements. We've already gotten some announcements this morning for both corn and soybeans. And by the end of this week, we're going to be start to lean towards looking towards next week's USDA production reports. So we'll get our average trade guesses out. And I think you're going to see a pretty wide range here on soybeans, given the very poor growing conditions that ended this summer. So once we have a better understanding of what we have here, the market's attention is going to start to shift to South American weather, where drought conditions continue there for much of Argentina. Brazilian plantings still in their very early stages. So right now, I think we're very close to, if we haven't already, carved out some contract lows in both corn and soybeans.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.